Good day, everyone. You are welcome to this week's Finance and Investment Tips program, a production of Christ Church Radio. My name is Ayodeji Ebo, an investment professional. This week, the focus is beware of fraudulent schemes and alternative investment opportunities. It has been observed over the years that investors are vulnerable to fraudulent schemes, Ponzi and pyramid schemes during period of low interest rates. Since COVID-19, interest rates have been at historical low levels domestically and globally. As a result, we thought it is necessary to put investors on alert on the ways to avoid fraudulent schemes and how to assess investment opportunities with minimal risk. The bi-weekly Treasury bills auction, through which the federal government borrows for the short term, held last week, and interest rates declined across tenors. The 91-day, 182-day, and 364-day instruments fell to 1.75%, 3.28%, and 4.1% per annum respectively. This means that if you invest 1 million naira for 1 year, your interest will be 41,000 naira. If we compare this to February inflation of 15.6%, it means that your savings would have lost a real value of 156,000 naira. The thought of this alone can lure investors to seek high-yielding investments without minding the inherent risk. Fraudulent schemers take advantage of investors' quest to add value to their savings and investment by promising extraordinary returns that are often unattainable for a sustained period. Both Ponzi and pyramid schemes pay consistent profits as long as the number of investors continues to increase. Hence, the strategy is always to get you to introduce more participants. The cycle breaks eventually, and late-stage investors become victims, unable to salvage any value, both their principal and anticipated returns. It is important to protect your hard-earned savings, as periods of low interest rates in Nigeria do not last for long due to the high inflation rate. Kindly listen to our podcast on identifying and avoiding Ponzi schemes. Link inserted. These are some of the investment products you may want to consider relative to Treasury bills to reduce the impact of inflation on your investments. 1. Federal Government Savings Bond. This is a retail bond issued by the federal government with a minimum subscription of 5,000 naira. The bond is safe and backed by the full faith of the federal government, with payment of interest every 3 months. The bond is issued every first week of the month at attractive interest rates. The match offer for 2-year and 3-year were 9.5% and 10.5% respectively. 2. Commercial paper. Commercial paper, also known as CP, is an unsecured short-term debt instrument issued by large corporates to raise funds to meet short-term financial obligations. The minimum subscription is 5 million. Companies issue more commercial papers during periods of low Treasury bills rates, as it is a cheaper means to borrow compared to bank loans and overdrafts. Be on the lookout for commercial paper offerings from strong corporates. 3. Fixed income mutual funds. These are mutual funds that invest in money market instruments like Treasury bills, commercial papers, fixed deposit, and bonds. The minimum subscription is 5,000 naira, with potentially higher return than Treasury bills. It's good to note that the return on mutual funds are indicative and not guaranteed. 4. High dividend yield stocks. Investment in stocks are for investors with medium to high risk appetite. In a period of low interest rates, investors can select stocks with high dividend return. Look out for companies where the expected return relative to the share price is attractive. Apart from dividend returns, there is also the potential to benefit from capital appreciation if there is an increase in share price. 5. Foreign stocks. While investment in stocks carries a higher risk relative to fixed income, investing in foreign stocks will provide a hedge against currency devaluation. You can consider investing in exchange-traded funds that invest in stocks. An exchange-traded fund is like a mutual fund that pools investors' funds and invests in a basket of stocks according to predetermined criteria. Currently, foreign stocks are trading at low prices due to geopolitical tensions and an expected rise in interest rates later in 2022. The current environment provides opportunities for investors that have a long-term investment horizon. Lastly, investment in agri and real estate are other options. but this is for savvy investors as the investment risk is high. Hence, if you do not have the experience to carry out a proper research, it should be avoided. Thank you for listening. Please join us same time next week for another exciting and interesting session. For questions, comments, and feedback, kindly forward to ccradio@rccgchristchurch.org or send SMS to 070-8246-3747. Stay blessed.